Hey guys, Stock Saturday, and it's a green week, and I've been spending some money at long last. So the portfolio's up about 3%, about 14,000, and yeah, compared to the S&P, down 0.52%. So yeah, slightly better than that, and Nasdaq is up 0.96% for the week. So tech doing a little bit better from the looks of it. I have sort of still got quite a bit of cash to spend, been sort of taking some smaller positions, and yeah, so I've got about 10,000 sort of in here, a little bit in the ISA, and we'll see where we go. Had a fairly good week for Broadcom. Looks like they're beating earnings, and I'll probably come to their earnings next week. I thought I would just go through the new buys this week, but yeah, looking pretty good. TSMC looking pretty good as well. Himax Technologies, though, is sort of the standout performer for the week, even better than Broadcom, sort of getting a bit of a link to Nvidia. So they've sort of been working with Nvidia in some small capacity for a little while, but it's looking like they could potentially have some sort of critical parts in the next round of Nvidia, or the next generation, if you like, of Nvidia AI chips. So yeah, they suddenly got an enormous boost, and in the option side, that has made much more of a difference than here. I've sort of gone just slightly green in here, where it was sort of down a fair bit. But yeah, there's sort of that was the big moves, and then yes, so the buys are Applied Materials, CF Industries, Adecoagro, and FMC Corporation, which I will give a little highlight in a sec. Just to note though, the crypto miners are sort of, or mine at least, have been looking a little bit weak because they've been issuing convertible senior notes, basically taking the MicroStrategy playbook, in part at least. Riot Platforms issued, looked like about 500 million. Some people took a little bit extra. And yeah, they sort of came out and bought, looks like 510 million of Bitcoin. So they're not really using it for anything in particular. They still sort of issuing shares, diluting to pay the bills because they keep pretty much all of their Bitcoin. But yeah, the markets sort of don't really seem to like this at the moment. The sort of hope is that, well, I would rather none of them were doing it, to be honest, and we just let Bitcoin do its own thing. But I suppose their hope, and some of the other people's, are that their buys will sort of drive up the price of Bitcoin, and they're trying to sort of directly influence it rather than just mining and selling. So yeah, Riot got in on it, and we also had CleanSpark. I think people were sort of thinking they were the last one, maybe weren't going to do it, and then yeah, they've issued 550 million. But the market didn't seem to be quite as happy. Well, they weren't happy with Riot either, but they certainly weren't happy with CleanSpark, because they have said they intend to use net proceeds to pay the cost of the capped call transactions, to use up to 125 million to repurchase shares of common stock, which is a little bit odd, sort of basically diluting to do buybacks, but in the form of convertible debt. So that is a little bit strange. And repayment in full of the company's line of credit. So yeah, sort of diluting to adjust the balance sheet rather than to buy any Bitcoin. So people saw that sort of on a per share basis as quite poor, really. So looking at the buys, I decided to sort of start a little agriculture segment of the portfolio, and sort of picked a few different, variety of companies. First one being FMC Corporation. So they are a sort of crop protection company that you can see sort of quite well diversified, I would say. Maybe not quite so much on the product type. They sort of 59% insecticides for crops, 29% herbicides, got sort of fungicides, and some other sort of smaller sides of the business, but sort of certainly by crop. They sort of protecting all different types of farms. 20% soybeans, 20% fruits and veg. You've got rice, sugar, corn, cereals, cotton, um, and then sort of the other 20% split amongst various different types of farms. So it does give you kind of global, well, as you can see there, by region as well. Never seen, I don't think I've seen quite a company quite so diversified as this. Sort of 20% North America, 27 North America, 31% Latin America, 20% in Europe, sort of Middle East, and 22% Asia. So really, really global. Normally with, especially sort of American headquartered companies, you sort of see North America as a huge section, and then they always call it international, which I think is a little bit, I don't know, tongue in cheek. Like America is 3% of the world's population or something. Obviously, GDP is very much different, but when you're talking about revenue from the whole world, but yeah, I think as far as diversification goes, that is pretty much perfect. So it sort of covers all well, a large number of sections of farming, and yeah, sort of various products and diversified across the world. So yeah, I'll probably come into them in a little bit more detail, sort of with earnings, and yeah, give them a little bit more of a look. So next up was Adecoagro, listed sort of in the US, but is a Latin American focused farming producer. They sort of produce, so they produce sugar, ethanol, and energy. But sort of the side I was sort of more interested in was grains, rice, peanuts, and some dairy products as well. Sort of more interested in the grains, rice, peanuts, the sort of staple foods, if you like. It's also, vegan, like anyone in the world can eat these pretty much. And yeah, they're in Brazil, Argentina, and Uruguay. And then, yeah, they give you a sort of segment breakdown as well. So sugar, ethanol, and energy sort of in total makes up about 50% of the revenue. And then you've sort of got crops, rice, and dairy at 15, 18, and 17%. Would be nice to sort of see this a little bit more diversified towards, the crop side maybe. You've got dairy, sort of obviously more and more people are going vegan, maybe won't want as much dairy, and if they're going vegetarian, then they might not even want the livestock at all. But yeah, this is sort of Latin America. I don't think it's quite happening so much there or the rest of the world, really. I mean, from what I've read, the sort of vegan movement is more a Western developed world thing. It's not so much in the rest of the world. But yeah, on the profit side as well, you can see it's even more skewed towards sugar and the energy side. So yeah, crops only make up 5% of EBITDA, rice at sort of 10%, dairy at 6%. Yeah, sort of kind of hoping that can maybe tilt a little bit more towards those over time. But it's worth noting the sort of ethanol and energy business does sort of provide, renewable green energy, CO2 credits for other people. You potentially get the sort of a little bit of revenue from that, renewable natural gas certificates. So yeah, it's seen as a bit more green energy than other types. And they sort of give you a nice little breakdown of, the sort of what are, as far as profit goes, smaller businesses, the crop side, the rice side, and the sort of dairy business, which they're sort of, always on about animal welfare and sort of how they're very keen focus on that. But yeah, they do lots of different types of dairy products as well on top of just milk, milk powders and cream flavored milks and all that sort of thing. But it was the bottom section that sort of really interests me, as I say, staple foods that no one really gets away from. Yeah, these aren't sort of luxury foods. It's essential. And then obviously the sort of energy side, renewable side, I thought overall a very nice company, and the financials look pretty solid. As I say, similar to as with FMC, I'll come back to the financials sort of on next earnings. So sort of to round out my little pie, as you could call it, we've sort of had FMC as crop protection, we've had Adecoagro as a producer, and CF Industries are the sort of nitrogen, ammonia, sort of largely fertilizer company. So yeah, they produce low carbon ammonia and nitrogen for crop fertilizer. So it's a strong industry. It's obviously essential, and they sort of show here the two sides of the business basically. So they call it food to feed a growing population. Population growing 1.5 to 2% annually. Nitrogen is used in agriculture to maintain a high yield in corn, wheat, sugar, and cotton. We're not feeding with cotton, but it is required. So, and they call it non-discretionary. So there's no choice about putting in nitrogen unless people are coming up with sort of futuristic fertilizers that don't use it. So that accounts for about 80% of globally traded nitrogen. There's some sort of industrial uses in there as well. And then sort of clean energy potential to power the world's future. They sort of see this ammonia side as having various uses, decarbonising potentially hard to abate industries such as power generation and marine shipping. I'm not sure we're going to have enormous barges, powered with ammonia anytime soon, but we'll have to see. Enhances existing businesses with low carbon fertilizer and industrial product offerings. So, yeah, we'll see. That's sort of more starting in 2025. Low carbon ammonia available, and yeah, I sort of like that as another two-sided business, really. And my other buy was Applied Materials. So one of as they say, the world's largest semiconductor and display equipment company. So yeah, 26 billion in revenue. They sort of make the smaller, I would say, not very, very small, but smaller equipment than people like ASML. And it is more the sort of bits and pieces. They do make some sort of fairly large machines in the industry, but they're not making the sort of the main lithography machine to make the chips. They are sort of making, smaller bits and pieces, but still essential. Stuff costs sort of millions of dollars, but ASML's lithography machines cost hundreds of millions of dollars. So yeah, Applied Materials are still basically an essential part of the chain. I don't think there's really any competition from what I've seen for their products, and they just sort of all work together. People like TSMC, ASML, and Applied Materials, and sort of Lam Research and people like that. They all just seem to have a healthy relationship with each other. They sort of put their prices up in similar amounts. They don't sort of take advantage of their monopoly too much because they know it would sort of harm the others and eventually harm yourself. So yeah, I like that that approach, really. So you can see they're a pretty large company, spend an awful lot on R&D. They operate in 150 cities in 24 countries. Awful lot of patents, obviously, with this sort of equipment and smaller bits and pieces, rather than sort of, as I say, someone like ASML just making the big machine. And yeah, I thought financials looked pretty solid for a company with sort of not a full monopoly, maybe as much as ASML, but sort of, I would say, a fairly large market share, which is not really encroachable by too many other companies. So yeah, I'll come back to them at some other time. So looking at economic news, we had Wednesday the CPI for the US, basically all on target, but I suppose you would see that as not particularly good. Core CPI year on year is 3.3%. So Jerome Powell's been saying, that needs to get to 2% over time, and it isn't. Headline CPI at 2.7%, so that's up 0.1%, as expected, I suppose. So you'd sort of probably say people have been pricing this in for a good while, but yeah, they do seem to be focusing more on the labour market and just cutting anyway, regardless of inflation. They've sort of been saying, as I say, this core PCE always says needs to come down to 2%. Maybe we'll sort of try and put more of a focus on that, but even that's nowhere near 2%. You had the EU lower rates, sort of as expected. They don't sort of have the nice round numbers of the US. They lowered from 3.4% to 3.15%, so a 0.25% cut. And yeah, 3.15 is fairly low, quite a bit lower than the US already. I will say they never really wanted to hike. They were sort of forced into it by everyone else, and yeah, they're sort of first to jump on the opportunity to cut. So yeah, that was pretty good. Jobless claims in the US, no sort of real issues there. Slightly higher than expectations, but that's fine. Still relatively low numbers overall. And yeah, the UK sort of looks awful, basically. Much worse than expected on sort of GDP, industrial production, manufacturing. We don't really do a huge amount of manufacturing, I suppose, so shouldn't really take too much focus on it. And that was pretty much the news. So yeah, looking at the portfolio, as I say, the crypto miners sort of having a little bit of a rough week. Sort of partly seems to be due to issuing shares. Kind of wish they wouldn't be and just let the business run itself, but yeah, they seem to want to. Gold and silver sort of having a bit of an up and down week, sort of rocketed up to 27.50, I think, on the gold, and sort of back down to 26.50. Sort of various China stimulus news and sort of all sorts of news going into that, from what I can see. On the interactive broker side, not all that much change. I'd have changed I'm sort of changing some of these numbers into the right currency, realizing that the spreadsheet isn't sort of entirely accurate. The sort of day change, where I've got things like KGHM, that's in zloty, so it shouldn't be in pounds there. I need to sort of have a fiddle around with some of the formatting, but there we go. And yeah, on the invest side, there has been quite a bit of change. I put some of the money that would have gone into Trading212 maybe into interactive brokers, and bought some more KGHM. So it's outside the ISA, and it's got a slightly higher average cost now than my others elsewhere. So I'm down on it, but overall up on the total position. But happy to buy a bit more of them, copper and silver. And yeah, you can see on the options, Hive is a little bit worse, Riot is a little bit worse as well. But Himax sort of having their enormous rise. They went up 45%, I think, on this Nvidia news, and then sort of dropped back a little on Friday. But yeah, suddenly the options have burst into life. The stock's $8.50. My options are for them to sort of go above $10 by January 2026. So still over a year to run, and now it's $8.50. I think there is, more optimism that they can go well above $10, where that sort of seemed a bit of a pipe dream before. I was kind of expecting it to be a sort of slower grind towards $10 and above, not 45% in one day. But yeah, there we go. So what is about £5,000 investment is now worth £35,000 and 640% in the green. So very nice. Hopefully we can get you know, maybe not a similar move, but a slower move on some of these others. Equinox sort of still in the red, but looking slightly better. Kura Mining sort of down a little, and yeah, Fortuna sort of down slightly. I have spent about 1,000, about 1,200 maybe of cash on more Equinox, so January 2027 options, giving me a nice 2 years for them to come good, get their cost of production down, and yeah, see where we can go from there. So certainly very happy with the option side overall, and yeah, you can see why you sort of go for these even if they are high risk. So leave your thoughts in comments below if you guys are buying anything, enjoying this turbulent time, and like and subscribe. See you soon.